Hey there, tech enthusiasts. Welcome to the Monday edition of the Tech Stocks Daily Podcast, where the week kicks off with a juicy platter of tech scoops. Today, we're digging into the trade desk's dramatic stock tumble and the sizzling legal heat they're facing over AI hiccups. Plus, Palantir's soaring stock has caught investors' eyes with impressive earnings forecasts. Then, Manhattan Associates is under the legal spotlight due to mismatched forecasts. And finally, we'll unpack Apple's stock buzz and the encryption showdown with the UK government. Ready for a wild tech ride? Let's dive in. All right, folks, brace yourselves because today we're diving into a hefty serving of tech drama, courtesy of the trade desk. Now, if decisions in the advertising world made you lift a brow before, wait till you get a load of this. Here's what's happening. The trade desk, which is a pretty big deal in the fancy pants neighborhood of digital advertising, is unexpectedly catching heat from a whole bunch of people who are really not thrilled right now. It's like the neighborhood block party just went sour and everyone's pointing fingers. Why? Well, at the center of this kerfuffle is a futuristic AI-powered forecasting tool called Kokai. Think of it as the trade desk's shiny new toy designed to help advertisers deploy their ad spending more smartly. Instead of tossing dollars to the wind, they're supposed to hit their target audiences smack dab in the face, and it sounded great. On paper. But here's the tinkin' kicker. Rolling out Kokai has not been the walk in the park trade desk hoped it'd be, nor was the transition from their older platform, Solimar, to Kokai smooth like a polished ad pitch. Execution challenges have reportedly been hitting them harder than a toddler with a spoon. Not only did these snags slow Kokai to a crawl, but the company's overall performance took a nosedive. Namely revenue. Oh, revenue, the universal Achilles heel. Have confidence in trade, said no investor ever who just saw their shares plummet. And nosedive, they did. Investors watched their stock take a heart-stopping freefall, over 32%, when the trade desk didn't just miss their fourth quarter revenue guidance, but belly flopped spectacularly below what's called experts' estimates, both for Q4 2024 and forecast, no pun intended, first quarter of 2025. Eek. So we've got not just one, but two heavyweight law firms climbing into the legal ring. The Gross Law Firm and Robbins Geller Rudman and Dowd LLP. Shareholders have been called, nay invited, though summoned feels more appropriate here, to take a cudgel or maybe just raise a concerned eyebrow as lead plaintiffs. The deadline? April 21st, 2025. Why the great rush? Because menacing deadlines add that extra zing to high-stakes courtroom drama. These firms assert that the trade desk misled investors about the extent of Kokai's rollout troubles. Apparently, not all that glittered was gold or particularly functional AI technology. The claim, investors were spun into a web of reassurances that had all the legitimacy of a spam ad offering you $1 million for clicking, but with more damaging consequences. In true American class action style, both firms are ready to rally a parade of disgruntled shareholders behind a banner that practically screams, "I told you so." So, there you have it. The trade desk, once bazared and puffed, is now knee-deep in Wall Street smack talk and somewhat pedantic lawyer speak. Exciting stuff. Grab your popcorn for this one. Who knows how it'll play out in the corporate juggernaut theater. Until then, stay savvy, stay informed, maybe tiptoe around throwing money at shiny promises, and definitely keep tuning in for your tech scoop. Palantir Technologies has been creating quite the buzz lately, finding itself as the focus of attention for investors and market analysts. Here's why PLTR, as the stock is known, made headlines today. First off, Palantir has been making strides with its stock gaining a commendable plus 3% over the past month. This is particularly noteworthy when you consider that while PLTR has been on the rise, the Zacks S&P 500 composite hasn't fared as well, showing a decline of minus 1.3%. Also, the broader sector Palantir belongs to, the Zacks technology services industry, has experienced a slip of 2.1% in the same period. So what's fueling this upward trend for Palantir while others are dipping their toes in the red? A big factor driving interest is Palantir's earnings outlook. Analysts have been revising their earnings estimates upwards, a development that often shines a favorable spotlight on a company's stock. The Zacks consensus estimate for Palantir's earnings this quarter predicts that it will hit 12 cents per share, marking a robust plus 50% year-over-year increase. If that isn't enough to get investors' hearts racing, over the past 30 days alone, there's been an 11.4% positive revision for PLTR. In the fast-paced world of stock markets, those are some eye-catching figures. Looking forward to the current fiscal year, Palantir isn't slowing down. Its earnings are expected to grow by plus 31.7% to 54 cents per share, with a 2.9% upward adjustment recently made to projections indicating continued positive sentiment. Analysts are just as bullish for the next fiscal year, anticipating a 24.3% hike, with estimates shifting upwards by a healthy 16.1% in the last month. Palantir's impressive revenue growth gives more reason for excitement. It's expected to bring in $864.52 million this quarter, a 36.3% increase from the previous year. And if that doesn't make Palantir look like an overachiever already, the company has consistently blown past revenue expectations, with last reported revenues of $827.52 million, representing a modest yet surprising plus 6.4% surprise over the consensus estimates. Grappling with numbers longer than your shopping receipt? Here's the kicker. Palantir is graded F for value by Zacks, suggesting it's trading at a premium relative to its peers. While it might sound worrisome like getting a bad haircut before school pictures, this high valuation might not deter investors given the strong growth trajectory. Palantir might just have enough going on under the hood for investors to look past its premium pricing. But don't just take my word for it. Spicy as it is, Palantir sports a Zacks rank number 2, forewarning that its dance on the stock charts isn't over yet, as it's likely to outperform the market in the near term. Whether you're ready to jump on the Palantir bandwagon now or want to wait and see where this tech heavyweight is headed, one thing is clear: PLTR is primed for attention. So don your shades and keep watching its bright moves. All right, tech fans, buckle up, because today we're diving deep into some hot-off-the-press legal drama swirling around Manhattan Associates, Inc. Manhattan Associates has found itself under the legal microscope with two major law firms, Johnson Fistel, LLP, and Bernstein Liebhardt, LLP, going full throttle in investigations against the company. Both are raising questions related to potential securities violations. So grab your popcorn, because this is a story of disappointing forecasts leading to some courtroom chaos. So what kicked off this frenzy? Manhattan Associates recently released their fourth quarter results for fiscal 2024, and boy, did it rain on Wall Street's parade. The company not only fell short of expectations, but also painted a less than rosy picture for fiscal 2025. Projected growth plummeted to a measly 2.2% compared to a robust 12.3% previously, thanks largely to hiccups in their services segment. Customers are reportedly tightening their belts on spending, and foreign exchange volatility hasn't helped either. This announcement stirred the pot considerably, sending stockholders into a frenzy and prompting legal eagles to swoop in. First up, let's talk about Johnson Fistel LLP. This sturdy ship sails through waters of shareholder rights and securities law, representing individual and institutional investors. They've launched an investigation into Manhattan Associates to sniff out any potential mishandling of fiduciary duties or lapses in complying with federal securities laws. Investors who suffered losses are being encouraged to join forces as the firm digs into what went wrong and why. Meanwhile, downtown in New York, Bernstein Liebhardt LLP is reminding investors of a ticking clock. They are diving into a securities fraud class action lawsuit targeting the company. The suit alleges that Manhattan Associates duped investors with misleading growth forecasts. Essentially, someone might have sprinkled some fairy dust on those responsible targets the company touted, or so it's alleged. If you lost money on MANH securities between October 22nd, 2024 and January 28th, 2025, this one's for you. Now, this isn't the firm's first rodeo. Bernstein Liebhardt has secured eye-watering sums in past class actions, and given their heavyweight reputation, investors are likely watching closely to see how this pans out. The deadline to become a lead plaintiff is April 28, 2025, so there's some urgency for investors to decide their next move. These unfolding situations are stark reminders of the unpredictability of investing and the crucial role of transparency and accurate forecasts in maintaining investor trust. While these legal proceedings are pretty complex and darn serious, what's clear is that both law firms are determined to stick it to financial missteps. As developments continue to roll out, investors will be hoping for a resolution that steers the company and their stock portfolios back on course. Keep your eyes peeled, folks, because this legal roller coaster is just starting to gather steam. Oh boy, Apple's been the talk of Tech Town today, and it's making headlines on a couple of different fronts. Let's dive into what keeps the Apple universe buzzing. First up, we've got a scoop from the money magnates in the stock market. There's been a flurry of action with the options traders, who are apparently bullish about Apple's prospects. Out of 21 unusual trades involving Apple, a majority are betting on the company's stock value going up a notch. These traders have pinned Apple's price between $220 and $247.5 over the recent quarter. And while those numbers might sound like coordinates on a treasure map, for Apple investors, they're as good as gold-studded assurance of future prospects. There are some daring traders taking a chance on Apple, hitting an average price target of $325. Now, I don't quite have a crystal ball, but there seems to be more than a hint of optimism for Apple. And when big investors make moves, there's a sort of ripple effect throughout the market, like a domino run by the Monopoly Club. This optimism, however, isn't just driven by Apple's snazzy lineup of gadgets, but a strong belief in its ever-expanding software ecosystem, and I guess a subtle appreciation for their killer ads too. Now, on a completely different angle, Apple's encryption standoff with the UK government is causing quite the stir. President Donald Trump has jumped into the ring, blasting the Brits for trying to make Apple spate its encryption policies. Apparently, the UK wanted Apple to dial down its security so they could peek into folks' iCloud storage, but Tim Cook and co. pulled a reverse card, opting to withdraw their advanced data protection rather than folding to the demand. Trump's doing some pretty serious name-calling, comparing it all to what happens over in you-know-where. The move by Apple is raising eyebrows, questions, and a good bit of applause among privacy champions. It's a real dramatic showdown between privacy concerns and government demands. Might feel a bit like you're watching a Cold War era spy thriller, eh? Analysts and cybersecurity experts are camping on Team Apple right now, condemning UK's request. Not every day you see a company pulling out a feature just to make a point. Bet you forgot about the right to privacy. seems to be the message from tech's towering giant. What do you guys make of this buying spree on Apple stocks and the encryption tiff? Is Apple wise to hold its ground, or should they shake hands across the pond? Throw your thoughts in the comments below. Share your predictions as well. Will Apple's stock rocket up, or are we looking at a roller coaster ride? Catch you soon with more tech. I wrapped up the segment by summarizing Apple's news across stock market happenings and the encryption debacle, encouraging viewer engagement as per your usual style. Let me know if you'd like any changes. All right, let's turn the spotlight on Palantir Technologies for a moment, as this one's got some spring in its step. Now, given the recent news and current performance, I'd be inclined to lean towards buy for Palantir right now. Here's the scoop. Palantir is showing some solid upward momentum, clocking a notable plus 3% gain over the past month, while other indices stumble. They've got analysts singing their praises with revised earnings trending upwards, which is like music to any investor's ears. The anticipation of a plus 50% year-over-year earnings increase this quarter, and the forecast of continued growth into next year, paints a pretty positive picture for PLTR's prospects. The whiz kids in analytics are predicting robust revenue figures with a cool 36.3% bump this quarter compared to last year. Palantir has consistently beaten revenue projections lately, which only adds some more shine to this stock. High valuation concerns notwithstanding, the potential strong growth trajectory makes it a delicious temptation for investors willing to overlook the premium price tag. But remember, while PLTR's current path looks promising, it's crucial for each of you to do your own homework. Dive into those reports, check competing analyses, and weigh all potential risks before making any moves in the stock market jazz world. Stocks may have sharp dance steps, but your decisions should have smooth, calculated moves. So Palantir, it's a buy, but proceed with that savvy investor hat on. Happy investing, and keep staying tuned for your daily tech juice. And there you have it, folks. Today's tech world delivered quite the roller coaster of excitement and drama. The trade desk finds itself in the legal crosshairs amidst a stock plummet. Manhattan Associates grapples with accusations and investigations, while Palantir steps into the limelight, earning analyst praise and investor interest. Meanwhile, Apple is catching everyone's eyes not only in the stock market buzz, but also in its tug-of-war with the UK government over encryption. If you enjoyed today's Tech Tea, don't forget to give this video a thumbs up, hit that subscribe button if you haven't already, and share it with your fellow tech enthusiasts. And make sure to join me same time tomorrow for all the fresh scoops from the Tech-iverse.